Also note that we traded to the low end of this hourly imbalance, okay? So I like how we're finding initial support off of that. So this black line here, I'll go ahead and just bold them. Okay, so we see it spike up there. Alright, boom. There's the take profit hit with speed. There you guys have it. One and done, one contract. I don't care what you guys say about it. That's more than enough for me. It's 10 handles. And a lot of 2022 model traders just got absolutely wrecked. Alright, what's going on, guys? GK the Trader here. I'm sitting down here to review non-farm payroll. Today is December 8th, 2023. Now, starting on the daily time frame, as always, right away, if you look, you can see that we dropped down into a short-term discount. Discount what? BISI. This is our inefficiency classified as a BISI, so this is buy-side imbalance, sell-side inefficiency. It needs sell-side, right? So you can see that we dropped down into there. Essentially the midpoint, if you measure it out, you'll see that we traded right around the midpoint there, this imbalance. And then we come the whole way up off of it and close right up here. And then this is very key. After we do that, we create this swing low. Okay? So this candle's low, this candle's higher low to the right of it, this candle's higher low to the left of it. And then if we look here on Wednesday, we can see that we traded higher, right? And then we come the whole way down and close here, but we still keep this swing low intact. Very important in terms of reading order flow on the daily time frame, right? And then Thursday, what do we have? Well, if we're looking at a weekly profile, we'll see that Thursday made that higher high. So naturally, we're going to be favoring longs as a continuation going into Friday, right? So we look at Friday, we see the opening price here. And what do we do? Below the opening price, we wicked down right at the news release. And what do we trade to? The opening of this down close candle. Very precise. You see the reaction off of that. We're disregarding the wick, because when you have longer wicks on down close candles, we don't really look at them. We just look at the opening, because that's where the bulk of the liquidity resides. So we just refer to the opening there. So we trade down there to do what? Accumulate long positions to the upside, right? And what are we targeting? Just as important as everything, the entire analysis. What is our target? What are we looking for us to trade up into? Well, we have this premium midpoint of this wick, which is also known as a gap, so we'll draw to that naturally. So we have midpoint of this wick, extend that out, and then we have these relative equal highs with this yearly high hovering above it. Very important. Very high draw on liquidity right here. Now, let's go to ES. And a little bit conflicting here, right? So NASDAQ was trading the whole way down here. ES wasn't having it. So with proper context and patience, we were able to classify this as a SMT divergence between ES and NQ to frame today's trade. So obviously NASDAQ traded down into here, making that lower low, sweeping the sell side liquidity below here and here. But ES wasn't having it. It failed to make that lower low, right? So I'm going to bring your attention to this discount wick here. So we'll take the midpoint. And you can see we have multiple closures right above that midpoint. Very key. And what do we make at the midpoint of that wick? This swing low, right? And then what are we targeting? Previous week's high here. Very high probable draw on liquidity. Previous week's highs, previous week's lows, previous day's highs, previous day's lows, all of that stuff, okay? So let's go ahead and go down to the hourly time frame. Now right away, with everything I gave you on the daily time frame, we wouldn't want this low being taken out. Why wouldn't we want this low being taken out? Because it's the intermittent term low. So if we're bullish, naturally we're not going to want us to take out an intermittent term low. We want to see a read on sell side like we have here, but not an intermittent term low broken. At that point, you'll have to reconsider your bias. But let's take our range. So we'll take the low to the high. And where do we trade to? A discount, optimal trade entry level, 60% retracement, and then almost to the 79% retracement. Now, what discount are we trading into? This imbalance, right? So I'm monitoring what we do when we drop down to that. And what do? We came the whole way up off of it and closed, not even close to it. That right there is a dead giveaway that we're going to be going higher. And what are we targeting? Well, look at these engineered clean highs. We'll get more into that on the daily, or not the daily, but the lower time frames. But for now, I'll mark this out. This was the main draw on liquidity. This is where my take profit was set at, this very high. So not only do we have engineered buy side liquidity up here, but then you see how clean these highs are, right? Way too clean. And we're at Friday, right? So what would this be considered? Well, we sweep out an intraday sell side liquidity pool right here, right? And then what are we going to do? We're going to want to revert to previous 3 days highs. What's that? Well, this Friday high, this Thursday high, and Wednesday high. Previous 3 days highs, okay? Then we also have these relative equal highs hovering above these relative equal highs. So it becomes even more high probable whenever we have a liquidity pool above an internal liquidity pool. Very important what I just said there. Now, coupled with all this buy side, what else do we have? We have this new week opening gap. And why does that even matter? Why does this matter? Well, it yields fair value to larger funds. So naturally, it's going to want to draw up to those price points, right? So, with everything being said there, before I go into the lower time frames, I'm going to show you this hourly imbalance because this was very key for framing my lower time frame long. Okay, so I'm just going to bring your attention. So if you see these black lines on the lower time frame, you'll know what this is. So before I dive deeper here, I want to bring your attention to one thing. Now, number one, obviously you can see the internal sell side liquidity swept here. So this is part of our purge and revert. So we come down, sweep short-term sell side, and then we'll revert to previous 3 days highs, right? So we sweep these internal lows. So what is this? Previous New York session lows. Very key draw on liquidity, okay? But if we switch to regular trading hour gap, you can see that this discounted balance that was traded to, you can't see that here because the 8:30 news release was pre-market. You're not going to see that in regular trading hours. But it wicked down into this imbalance, but also previous day's regular trading hour gap with the sell side. This is what I was talking about yesterday. Just because it's a new day doesn't mean we're not referring to old regular trading hour gaps. In fact, we're looking at them the previous 3 days regular trading hour gaps, right? So that's like one of the things you want to write down maybe. Now, let's go to the 5-minute time frame. So we have every single price point that we wanted to see repriced to was traded to. Now we just need lower time frame confirmation. Now, before I go lower, real time in my live stream, I was saying before I consider longing anything, I need to see at least 25% of this wick worked in. And what did we do? Well, let's measure it out. Now, it wouldn't be favorable to see the midpoint. It would be favorable to see 25%. So if the algorithm is going to want to aggressively reprice higher, it's more so likely to respect 25% rather than the midpoint of a large wick. Okay, and what do you know? What is this? Where does price stop at? Right to the tick of the 25% upper quadrant of this wick here. That's not random, obviously. So I was waiting for this price point to be repriced, and then what do we have? We have a swing low being formed there, and what does this make this? This makes this an intermediate term low, right? So we have this swing low here, swing low to the left, swing low to the right. So now we have an intermediate term low with proper context to support higher premium targets, right? So we have our targets, and we have context and narrative forming not from the daily time frame down to the 15. Very important. All right, down to the 5-minute time frame. Now, I was monitoring price real time with my private members in my live stream, and I was showing them the 25% of this wick. It was respected beautifully, created the swing point, and moved away from it. So with how we were real time, I was saying that I was going to wait until the 9:30 opening to take any entries, and that's exactly what I did. So right away, I'm going to bring your attention to, obviously, everything we marked out on the higher time frames was already displayed to you, so we don't need to go over that again. So we have this swing point created here, and then we shift above with aggression this swing high and this swing high. So this would be our market structure shift, and then we create this imbalance with this down close candle. We do not want it to trade down here. This is our breakaway gap. We want this to stay open. Okay, so if it traded down here, I wouldn't even be enticing longs. So after that market structure shift, we have a repricing down to this discount 5-minute imbalance. So as soon as you see that, no hesitation, get in there, long, hold for the buy side up here. And this is exactly where I exited. Now, I was considering holding for new week opening gap, but I was content with the 10 handles. Now, let's go ahead and go down to the 1 minute time frame. So as I mentioned, we're going to be waiting for the 9:30 opening, specifically after the 9:30 opening and that first macro. Where's that first macro? Well, let's mark it out. And what do you know? When did we come up and pierce the buy side? When did we do that? Right within this macro. That is not random. Let's extend it out. This entire aggressive price movement to take us to the buy side took place within this macro. So very key time of day. You want to be studying this 9:50 to 10:10 time window to see if you can't find some good setups. So with that being said, I'm also going to bring your attention to this down close candle here. This is an order block, and you take the high of it and the opening, but right here I'm just using the high because that's where we reprice to here. So coupled with this 5 minute imbalance, we had this order block. Okay, now here comes the good stuff. Remember that inverse 1 hour Ferrari gap high and low that I brought your attention to in the hourly time frame? Well, where did we go long at? We get above it at the optimal time of day, and then we trade right down to the low end of it, and boom, off to the races to the buy side. This is not random. How do you know how far down we'll go? How do you know how high up we'll go? Well, you look for where the inefficiencies are. You look for balanced price ranges, inverse gaps, because we're likely to see this phenomenon take place. Now you have to have the proper context and time of day to support this, but you can see as soon as we trade down to the low end here, and the order block, and the 5 minute imbalance, this gives me all the confidence I need that we're going to that buy side. And obviously I took the trade live, so there might be some guys showing you recordings after the fact, after they maybe took 10 losses, but that's not me. One more thing I want to cover. Now, look what happens here. After the 9:30 opening and we start trading higher, look right here at the 1 minute time frame. What happens? Well, we open here and we come down and match this. Let me take off the annotations. We open here and we come down and match this previous candle's high. What is that? That's an immediate rebalance within an old higher time frame imbalance. That is one of the best signatures you will ever come to find. And what happens? We left this gap open, so we have a breakaway gap and then an immediate rebalance. It's one of the biggest dead giveaways that we're going higher right there. So let's bring the old inefficiency up. Whenever you see a 1 minute immediate rebalance within a higher time frame imbalance, that's just bread and butter right there. Okay, so very nice gem that I just dropped at the end of the video there. And I think that'll just about do it here. This is everything I used for my trade today. Very precise day in terms of intraday trading, not swing trading. But I hope you guys found this insightful. If you did, hit the like button,